Hello traders, Gary Wagner here. Just after 12 noon in Honolulu, 5 o'clock in New York. It is Monday, 2nd day of December 2019, and this is the daily report for gold and silver. We did have a lower dollar today and an interesting mix of fundamental news that should have been bullish for gold, but yet gold and silver did close lower on the day. There has been a setback in terms of the current trade negotiations between the United States and China, with a tweet that came out on Sunday from China stating that the removal of tariffs is an absolute must before any kind of phase one agreement is signed. At the same time, we had Chinese economy ticking up a little bit, and that in fact was bearish, but we had a massively lower stock market, down about 269 points in the Dow Jones Industrial Average. All of these things combined did take gold, which was trading to a low of 1459, off of those lows and higher, but yet it still closed lower on the day. Let's take a look at how prices closed for the day. We are looking at gold futures. This is basis the most active February contract at this point, closing down about $4.50 at 1468.20. What is interesting about today's move is, first, it did come well off of the lows that came in the morning at 1459.80, but all of this was in light of an extremely weak U.S. dollar losing about 41 points, closing below 98 at 97.79, and about a 1% decline in the Dow Jones Industrial Average, closing down 268 plus points on the day. That being said, we didn't get any support from the aversion to risk on, nor the lower dollar when we looked at gold pricing or silver for that matter. Platinum and palladium did close higher. Silver closed down about 0.7%, about 12 cents at 1685. And then platinum did close slightly higher. We'll put that in the unchanged column, but at 960 cents. And palladium gained about 0.8%, $15, still on a rampage, still moving to higher ground at 1825.20. Let's take a look at our technical studies. I'm going to compress the chart in a second, but the reason that I've got it so expanded is to really take a look at what we saw happen in the market today, today's candle. This is a doji candle. The open and close are very, very close together, a couple of ticks apart, but what's extremely interesting is the low that it made and the fact that it came off of that low. Now, we are absolutely at a critical point. We've talked about the fact that 1450 to 1453, the 0.38% retracement level, is a critical level that we need to see gold hold if we're going to expect it to start to move higher. Now, we have had a series of lows that have come in well below that, but on each occasion, it has traded there, created a low at that price point, but the real body, in other words, the difference between the open and close, that rectangle, that has remained above this line. What that tells me is that we do have, first of all, solid resistance at the next level. And the next level, of course, comes in at about 1480, 1481, and that's this level right here. However, it still is indicating that we have some pretty unique support at this level. And even though they pushed the market down dramatically, they were able to recover. And I'm surprised, actually, that it did not close higher on the day. Now, in overseas trading last night, it was down about $11, and that's what we're looking at. But it did move back up to close only slightly lower on the day. Now, in terms of the big picture itself, the real question that we have to ask ourselves is, if this Elliott wave count has any kind of truth to it, when will we see this fourth corrective wave end? We believe that it did right here, but that was incorrect because it came up just a little bit. I'm calling it a false breakout and then back down. At the same time, what we are seeing is the formation of really a double bottom at this particular price point. Now, we have had news come out that the negotiations between the United States and China has taken a move from a guarded optimism to a guarded pessimism. China is now demanding that the removal of all tariffs be a critical component that's necessary to be in the Phase 1 agreement. We'll have to see what happens come December 15th. It is highly believed that Trump will hold back implementing these tariffs on the 15th to have a negotiation still in play, but anything is possible. The one thing that I do find really interesting is, in light of a lower gold market, was really on the back of a much lower US dollar. And we can really see the kind of move that the dollar incurred today, a tremendous down day. It did kind of find some tentative support at the 0.618% retracement, which is at 97.70. Market closed at 97.79. Nonetheless, when we take a look at how that affected gold, and I've just put up the Kitco Gold Index, this of course is referencing the spot market, but the spot market was down $2.20 on the day. But when we look at it closely, it was actually down $8.50 due to normal trading. And because of a weakening US dollar, we got to add $6.30. So that really curtailed the fall itself. But without the dollar weakness itself, we would have seen a much stronger down day. My recommendation is to maintain our current neutral position. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.